Florida's housing boom is cracking wide open, and the numbers are brutal. In 2025, over 275,000 people are expected to leave the state, fleeing soaring costs, collapsing affordability, and crushing insurance bills. Median home prices that rocketed 60 to 80% during the pandemic are now slipping, with some cities already down $40,000 to $75,000 from their peaks. Mortgage rates near 7% have doubled monthly payments, turning a $350,000 loan from $1,475 to over $2,300, while insurance premiums in coastal areas have exploded past $8,000 to $12,000 annually. Inventory is flooding the market, sellers are slashing prices, and Florida's once red-hot real estate dream is looking more like a slow-motion crash. Number 10. Tamarak. Tamarak, tucked into the western edges of Broward County, is a city that's been riding the South Florida housing boom for the past few years. But in 2025, the cracks are starting to show. During the frenzy of 2021 to 2022, median home prices here shot up nearly 45%, climbing from around $270,000 to well over $390,000 in just 2 years. The combination of low interest rates and a flood of out-of-state buyers created bidding wars so intense that even modest two-bedroom homes were selling for $50,000 to $70,000 above asking. Fast forward to today, and the fuel that kept that fire going has run out. By mid-2025, Tamarak's housing inventory has surged by over 38% year over year, giving buyers far more choices than last year. The median sale price has already dipped to about $365,000, a nearly 7% drop from its peak. Sellers who bought at the top of the market are finding themselves in a dangerous squeeze, especially those with adjustable-rate mortgages that reset from 3% to 6.5% or higher. For a typical $350,000 loan, that rate jump means a monthly payment leap from $1,475 to $2,212, an extra $737 per month. That's money many homeowners simply don't have. The insurance crisis is making things worse. Homeowners' insurance premiums in Tamarak have skyrocketed, with some policy renewals climbing from $3,200 to over $6,000 per year due to rising hurricane risk and insurer pullouts. Combine that with HOA fees, often running $350 to $500 per month in many Tamarak communities, and carrying costs have hit a tipping point. Investor pullback is accelerating the downturn. In 2022, nearly 28% of Tamarak's home sales went to investors. Now, many of those buyers are unloading properties as rental demand softens and carrying costs eat into profits. Price cuts are everywhere. Homes listed for $400,000 last spring are now sitting at $375,000 with no offers. If trends continue, Tamarak could be looking at double-digit price declines over the next 12 months. For buyers, that's opportunity. For recent homeowners who bought at the peak, this could be the start of an equity wipeout they never saw coming. Number 9. Pompano Beach. Pompano Beach, once riding high on the wave of coastal demand, is now feeling the whiplash of a market correction in 2025. Just a couple of years ago, ocean view condos and inland single-family homes were seeing year-over-year price jumps of 20% or more, with the median home price peaking near $525,000. That peak was fueled by pandemic migration, low mortgage rates, and a rush of investors banking on short-term rental profits. But now, with mortgage rates holding above 6.75%, the same home that cost $2,200 per month in principal and interest just a few years ago now costs over $3,400, pricing out a huge portion of the buyer pool. Inventory in Pompano has swelled by more than 40% compared to last year, with many sellers forced to cut prices after months without offers. The median price has slid to around $495,000, a roughly 6% drop from the highs. But certain condo markets, especially those with high HOA fees, are falling even faster. Some waterfront buildings now carry monthly HOA dues exceeding $1,000, pushing total monthly housing costs for buyers into the $5,000 range once taxes and insurance are factored in. Insurance premiums are also weighing heavily, particularly in flood-prone areas east of Federal Highway. Policies that once cost $4,500 a year are now renewing at $7,000 to $9,000, prompting some owners to list their properties before the bills come due. Investors who counted on Airbnb income are seeing declines in occupancy rates and nightly rates as more units flood the rental market. Many are offloading properties at discounted prices to avoid negative cash flow. With high carrying costs, a buyer pool squeezed by affordability, and more listings hitting the market each week, Pompano's housing market momentum is clearly in reverse, and price adjustments are becoming the new normal. Number 8. Lauder Hill. Lauder Hill's housing market in 2025 is under intense pressure after years of rapid appreciation. Between 2020 and 2022, the median home price here surged from roughly $220,000 to $340,000, a staggering 55% jump in just 24 months. First-time buyers and investors piled in, attracted by relatively lower prices compared to neighboring Fort Lauderdale and Plantation. But by mid-2025, the market's tone has shifted dramatically. Mortgage rates averaging 6.8% have pushed affordability to the brink. A typical $300,000 mortgage that cost about $1,250 a month at 3% now costs nearly $1,960, an increase of over $700 per month. That surge has priced many local buyers out, leaving homes to linger on the market far longer than during the frenzy years. Inventory has climbed by 35% year over year, with multiple price cuts becoming standard. The median price has slipped to about $325,000, and entry-level homes in need of updates are struggling to sell even at reduced prices. Insurance premiums, while slightly lower than coastal cities, are still rising, averaging $3,500 to $5,000 per year. And some communities carry HOA fees of $250 to $400 monthly. Investor activity, once a major driver of sales, is slowing sharply. In 2022, nearly 30% of Lauder Hill's sales went to investors. Now, many are listing properties as rental yields shrink. The rental market is cooling, with average rents dropping 4 to 6% from last year, forcing some landlords to accept lower offers just to maintain cash flow. In neighborhoods where bidding wars once drove prices tens of thousands above list, sellers are now offering concessions like closing cost credits and rate buydowns just to attract offers, signaling a clear shift in market power toward buyers. Number 7. Boca Raton. Boca Raton's luxury-heavy housing market, which soared during the pandemic years, is encountering significant turbulence in 2025. In 2021 and 2022, the median home price jumped from around $475,000 to nearly $720,000, driven by affluent out-of-state buyers, low interest rates, and cash offers that routinely beat financed bids. Even modest 3-bedroom homes in older neighborhoods were selling for over $650,000, while oceanfront condos commanded well into the millions. Today, higher mortgage rates, hovering near 6.9%, have dramatically reduced the purchasing power of non-cash buyers. A $700,000 loan that once cost around $2,900 a month at 3% now runs close to $4,600 before taxes, insurance, and HOA dues. In many gated communities, HOA fees can reach $600 to $900 monthly, and coastal condos often exceed $1,200 per month, adding thousands to annual housing costs. Inventory has jumped roughly 30% year over year, giving buyers more leverage and forcing sellers to consider price reductions. The median price has eased to about $690,000, but in certain high HOA buildings or homes needing updates, discounts of $50,000 to $100,000 are becoming more common. Insurance premiums have also surged, with some high-value properties seeing policy renewals rise from $8,000 to $15,000 annually, especially in flood-risk areas east of the Intracoastal. This spike has created a burden for both new buyers and longtime residents, prompting some to sell earlier than planned. Rental demand, which previously propped up investor interest, is cooling, with luxury rental rates slipping 3 to 5% from their 2023 highs. Properties that once leased within days are now sitting vacant for weeks. Price softness is emerging in nearly all segments, from multi-million-dollar estates to entry-level condos, reflecting the city's transition into a slower, more cautious market cycle. Number 6. Ocala. Ocala, known for its equestrian estates and more affordable inland living, experienced one of Florida's fastest appreciation rates during the pandemic surge. From 2020 to 2022, the median home price skyrocketed from about $185,000 to $310,000, a nearly 68% gain in just 2 years. The influx of remote workers and retirees seeking larger lots pushed demand well beyond supply. By 2025, however, rising mortgage rates have altered the equation. A $300,000 mortgage at 6.75% now costs around $1,945 a month in principal and interest compared to just $1,250 a few years ago, an increase of roughly $695 per month. This affordability squeeze has slowed buyer activity considerably. Inventory is up 33% year over year, with homes lingering on the market longer than in recent years. The median price has slipped to about $298,000, with more sellers reducing asking prices to attract offers. While Ocala's insurance premiums remain lower than coastal Florida, they have still climbed, averaging $2,500 to $3,800 annually for standard coverage. Investor interest, particularly in single-family rentals, is cooling as rents have flattened. The average rent for a 3-bedroom home, which peaked near $1,900 in 2023, is now closer to $1,820, cutting into investor margins. Builders, who ramped up construction during the boom, are offering incentives such as $10,000 in closing cost assistance or rate buydowns to move inventory. Neighborhoods that once saw multiple offers within days now face weeks or even months before going under contract, signaling a slower, more competitive environment for sellers. Number 5. Fort Myers. Fort Myers was one of Florida's most talked about boomtowns during the pandemic housing frenzy. From 2020 to 2022, the median home price soared from around $260,000 to over $420,000, a staggering 61% jump, as retirees, remote workers, and investors flooded the market. Cash deals became the norm, and bidding wars pushed some homes $50,000 above list price. But in 2025, the market is showing signs of a sharp reversal. Rising mortgage rates, now hovering at 6.85%, have made financing significantly more expensive. A $400,000 mortgage that cost $1,686 per month at 3% interest now runs close to $2,624 per month, not including taxes and insurance. That affordability hit has thinned the buyer pool considerably. Inventory has ballooned by nearly 42% year over year, and homes that once sold in a week now linger for months. The median sale price has slipped to about $395,000, with certain segments, especially waterfront and flood-prone homes, dropping even faster. The aftermath of Hurricane Ian continues to influence the market, as many buyers remain cautious about long-term storm risks. Insurance premiums are a major pain point. Policies that once cost $3,500 annually are now closer to $6,000 to $8,000, with some flood insurance rates exceeding $4,000. These costs, combined with HOA fees of $300 to $600 per month in many communities, have pushed total housing expenses far higher than many buyers anticipated. Investor pullback is evident as rental rates soften. Short-term vacation rentals are facing lower occupancy and nightly rates, forcing some owners to sell at discounts. Builders are also offering significant incentives, like $15,000 closing credits or free upgrades to move excess inventory. The once red-hot market is adjusting quickly, with more price cuts each month as sellers face a new reality of slower demand and higher carrying costs. Number 4. St. Petersburg. St. Petersburg's housing market, once a magnet for artsy transplants and retirees, is cooling after years of explosive growth. Between 2020 and 2022, median home prices shot from roughly $275,000 to $455,000, an increase of over 65%. Neighborhoods like Kenwood, Old Northeast, and Crescent Lake saw fierce bidding wars, while waterfront condos along Tampa Bay commanded premium prices. In 2025, affordability pressures are weighing heavily on the market, with mortgage rates at 6.9%. A $450,000 loan now carries a monthly payment of roughly $2,975, up from just $1,896 at 3%, a jump of more than $1,000 per month. This steep rise has priced out many local buyers. Inventory has risen about 36% year over year, and the median price has slipped to around $435,000. Some higher-priced condos are seeing deeper cuts, especially those with HOA fees of $800 to $1,200 per month, which push total monthly costs beyond the reach of many buyers. Insurance costs are a growing problem, particularly for waterfront properties and older homes. Annual premiums that once averaged $3,800 are now approaching $7,000, with flood coverage adding thousands more. Many sellers are offering concessions, like covering closing costs or prepaying HOA fees, to entice buyers. The rental market, which once delivered double-digit returns for investors, is also cooling. Average rents for one-bedroom apartments have dipped from $1,900 to $1,780, and some landlords are offering move-in specials to fill vacancies. Builders, who bet big on luxury condos, are slowing new projects as pre-sales lag. While St. Petersburg remains desirable for its lifestyle, the financial strain of high prices, insurance hikes, and interest rates is clearly reshaping buyer behavior in 2025, with longer selling times and more visible price reductions across the market. Number 3. Cape Coral. Cape Coral's housing market, once one of the hottest in the nation, is facing a sharp cool-down in 2025 after years of unsustainable growth. From 2020 to early 2022, median home prices surged from around $235,000 to nearly $420,000, an increase of almost 79%. Fueled by low interest rates, a post-pandemic migration boom, and a surge in investor activity, the city became a magnet for both retirees and remote workers looking for waterfront living at affordable prices compared to coastal Miami. But with mortgage rates now sitting at 6.85%, the cost of financing has skyrocketed. A $400,000 mortgage that once came with a $1,686 monthly payment at 3% now costs roughly $2,624 before taxes, insurance, and HOA fees. An affordability shock for many buyers. Inventory has jumped nearly 45% year over year, and the median sale price has dipped to about $395,000, with certain flood-prone properties seeing even steeper declines. Hurricane Ian's lingering impact is still evident. Insurance premiums have exploded, with many policies doubling or even tripling in cost. Standard homeowner coverage now often exceeds $6,500 annually, and flood insurance for waterfront homes can surpass $5,000 per year. These costs, combined with rising property taxes, are pushing total ownership expenses into the red for some recent buyers. Investors, who made up nearly a third of all transactions at the peak, are offloading properties as rental demand softens and nightly vacation rates drop. Homes that once sold within days are now sitting for months, with price cuts of $20,000 to $50,000 becoming increasingly common. The market's shift from a frenzy to a slowdown has been swift, leaving both sellers and buyers recalibrating expectations. Number 2. Wellington. Wellington, known for its equestrian estates and upscale suburban living, saw housing prices surge during the pandemic boom. Between 2020 and 2022, the median home price climbed from about $450,000 to $700,000, a 55% jump fueled by affluent buyers, low interest rates, and out-of-state migration. In 2025, that momentum has reversed. With mortgage rates averaging 6.9%, a $650,000 loan now carries a monthly payment of roughly $4,289, compared to just $2,743 at 3%, a difference of more than $1,500 per month. This has priced many would-be buyers out, particularly families upgrading from smaller homes. Inventory has risen roughly 28% year over year, giving buyers more leverage and leading to more frequent price reductions. The median sale price has slipped to around $675,000, and properties in HOA-heavy communities, where dues can range from $300 to over $800 per month, are experiencing slower sales. Insurance costs have surged, especially for larger homes and properties with high-value roofs or older construction. Annual premiums that once averaged $4,500 are now closer to $8,000, adding significantly to ownership costs. Property taxes, pegged to these higher valuations from peak years, remain elevated, further squeezing budgets. The rental market has also cooled. Luxury rental rates, once commanding $7,000 to $10,000 a month during equestrian season, have softened by 5 to 8% as inventory increases. Sellers are increasingly offering buyer incentives, such as covering closing costs or paying for temporary rate buydowns, as they adjust to a slower-moving market. Number 1. Fort Lauderdale. Fort Lauderdale, long considered one of South Florida's crown jewels, is experiencing a housing market shift in 2025 that few anticipated during the boom years. From 2020 to 2022, the median home price surged from roughly $410,000 to nearly $690,000, a staggering 68% jump fueled by affluent buyers, record low interest rates, and heavy investor activity targeting both luxury condos and single-family homes. Waterfront properties and high-rise condos along Las Olas and the Intracoastal saw bidding wars that often pushed sale prices $100,000 over asking. But the affordability equation has changed dramatically. With mortgage rates hovering near 6.95%, a $650,000 mortgage now carries a principal and interest payment of about $4,295 per month, compared to just $2,740 at 3%. A monthly difference of over $1,550 before factoring in taxes, insurance, and HOA fees. Many waterfront condo buildings have HOA dues exceeding $1,200 per month, and some luxury developments approach $2,000, making total monthly costs prohibitive for a large share of buyers. Inventory has climbed by 31% year over year, with days on market stretching from an average of 21 days in 2022 to more than 60 days in mid-2025. The median sale price has eased to around $665,000, but certain condo units, especially those in older buildings facing special assessments, are selling at 10 to 15% below their 2022 peaks. Insurance costs are playing a major role in the slowdown. Annual premiums for waterfront homes can now exceed $10,000, with flood coverage adding another $5,000 to $7,000 in many cases. For some owners, total carrying costs have doubled since 2020, pushing them to sell earlier than planned. The rental market is also cooling, with average luxury condo rents dropping 4 to 6% from last year and landlords offering incentives to attract tenants. The shift from bidding wars to buyer hesitation has been swift, changing the city's market dynamics almost overnight.